BlackRock, the big old asset manager, they have a private credit investing arm like most asset managers now. And apparently, they are currently accusing a company by the name of Broadband Telecom and Bridge Voice, run by Bankim Brombat, of a $500 million fraud. Basically, the long story short on this
is when you see one cockroach, there's usually more than one.
Again, I always like to dig in on the specific frauds because it's interesting to me to see how the frauds are perpetrated, just to know, like, oh, gee, this is something I should look out for in the future. So I'll quote here from the Wall Street Journal. This is a WSJ exclusive. The dispute centers on a kind of debt deal known as asset-based finance, in which the borrower posts as collateral a stream of revenue generated by specified businesses, equipment, or customer receivables. Okay, so in this case, it's a telecom business, and so they borrow, and the lender says, if you default on this, I get the receivables coming in from whoever it might be. So, basically, this company that operated in the telecom space, maybe. It's unclear if they actually did, to be completely honest.
And they ran a brand named Carriox, in addition to the two names that we mentioned.
Yeah, so they effectively, these loans were underwritten by a company that BlackRock bought earlier this year called HPS. And HPS hired Deloitte to audit the financials and verify that the assets actually existed. They also hired an accounting firm, CBIZ, to conduct annual asset checks as well.
So, again, thinking about what the asset is here is important. The asset is the customers who are paying this company money. And so, again, because the asset that was loaned against was the future revenues that these customers will pay. And so what do you do when you do something like this? Well, sometimes you hire a company to go drive down to the building and make sure that it's in good shape. If you are an insurance company, you might do that. If you are a mortgage company, you might go do that. If you're lending somebody money for a home. In this case, you need to verify that the revenue that they are claiming exists and that you are lending against actually does, in fact, exist. The customers are there.
So what they were doing, HPS was reportedly emailing the customers saying, hey, like, just making sure, can you, like, give us proof of contract, things along those lines. And apparently, the company that was doing this auditing in July noticed irregularities with the email addresses. And basically said, hey...
Actually, I don't believe it was the auditor. It was HPS.
Oh, HPS, yes.
Meaning the asset manager themselves, rather than the companies
not
they
the
hire to check.
Yes. So HPS goes to Brombot and says, hey, like, these email addresses don't, like, seem to match up. What gives? He says there's nothing to worry about, and then stops answering their phone calls. Which is just like...
It's good to hear that it's not just Gen Z that ghosts people.
Not great. I'll quote here. On Wednesday morning, Brombot's office suite was locked and appeared vacant. An employee at an adjacent tenant said she hadn't seen anyone enter or leave the office recently. At the Garden City house listed at Brombot's residence, two BMWs, a Porsche, a Tesla, and an Audi were parked in the driveway, and a package next to the front door was collecting dust.
So are they alleging that he's gone?
The Wall Street Journal is basically making the case he ain't been here in a while.
Mm-hmm.
And after the HPS employee flagged these irregularities, a law firm started to investigate, hey, show me like some of these borrowers. And they found that these email addresses didn't match up with actual public web domains that were out there. And one of the customers, a Belgian telecom called BICS, said, look, we don't have anything to do with these emails. Like, we've never seen these before. And a security staffer from there said this is indeed a confirmed fraud attempt.
Is it really this easy to borrow $500 million or a third of $1 billion or whatever he borrowed?
Here's the thing. So the private credit space is one that has scared me for the last couple of years. And the reason...
Think about this. This guy set up a business, allegedly created a bunch of fake customers, and borrowed hundreds...
$500 million.
Of millions of dollars.
$500 million. There's been so much excitement for people trying to like raise money in this space, that the concern that I've had out there is just like, okay, there's just so much out there and you don't really know what any of this is. It all just gets lumped under like private credit. And, you know, the stuff that you get pitched on this stuff, it's like, well, it doesn't move around, so it takes volatility out. And it's like, no, just because something is privately held doesn't mean the value doesn't change. It just doesn't get marked to market on the same frequency as public markets.
It's more than that, too, though, because what I have consistently heard from the industry is we are better at assessing the risk. We use different tools than the banks do.
We know these companies. We get to know them, blah, blah, blah.
We use different tools. You know, we're able to track this stuff via online trends and really get to the bottom of the lending. And I shouldn't paint with a broad brush. In a few specific instances here, that is being alleged to be baloney.
Mike, it's no longer a few specific instances.
It's three or four.
It's 3 in a 4-week period that are all pretty grim, and no one knows what else is out there.
Okay, so
like this one we didn't know was here until this story was published.
Right, and by the way, you know, suits have been filed back in August, and we're hearing about it now. Why should the average person listen and care? That's a really important thing, right? Like most people out there are not managing money for insurance companies. Therefore, the average person might not have heard about private credit before the last 6 months.
So there are 3 reasons why the average person should care in my mind.
Okay.
The first is, as you noted, insurance companies have been big buyers of private credit because they like the high yield that you get. Typically, anywhere from like 9 to 15% is what you see out there at this point. And if you're an insurance company who's trying to keep your, you know, premiums down to be competitive in the marketplace, you say, if I can just earn more on my general account, I don't have to charge my customers as much. And so the concern out here is, hey, if more of this turns out to be bad than you would think, insurance companies may be left saying, oh, we don't actually have the money set aside that we thought we did.
Who else is out there? Endowments, pension funds.
Endowments, pension funds. The other thing, quite
family
honestly,
offices.
A lot of high net worth individuals have bought up a bunch of this stuff in the last, you know, few years.
Sure.
If you're not a high net worth individual, doesn't own this stuff, like that's not really your concern. But like, yeah, you could be, you know, someone who is in that situation. The other place where this is potentially a concern for people is the mechanism for all of this as a way to generate economic growth is these small to mid-sized companies tap these private credit markets in order to get access to funds, which grows the economy, which causes these private credit firms to loan more money, which grows the economy more.
Yep.
If the private credit firms suddenly say, gee, we need to, you know, slow down or pause new issuance, it has an impact on the U.S. economy because that money is not going in. The comparable in 2006, 2007, hey, as you started to see subprime loans going under, companies pulled back from subprime lending, which then made it harder for real estate prices to move up, which in turn made more loans go under, which in turn ended up blowing the whole thing up.
Yeah.
This case, the center of this, if it develops into a problem, would be small to mid-sized companies in the U.S., not housing.
Yep. And that's the point here is, okay, there's been a few cases of fraud. Is it incredibly widespread? Is it all over the place? I don't.
No one knows.
No one knows. Nobody's got any idea.
Anyone who says, like, this is going to be this or this is going to be that doesn't know right now.
But whether it's widespread or not, the logical thing to do if you're one of the companies that owns this stuff or is one of the ones originating the loans is to scrutinize it a heck of a lot more than you did this time last year.
You finally start asking the question, hey, what's in my portfolio? And it's not just that. It's that market for, you know, packaging this and selling it off. The people buying it from you are now saying, hey, how do I know that you don't have some of this stuff in here? Can you securitize it and get it off your balance sheet quickly enough? That's, you know, a potential issue. And the third place where this potentially matters to people is in public markets. There are companies in the S&P 500 where this is their main business model. And look at how heavily financials have traded over the last month or two since this started coming out. even with the S&P 500 making new all-time highs, even with strong quarterly earnings from a lot of the big banks, financials as a whole, and in particular the regional banks and the asset managers, can't really get off the mat right now.
Right.
So, again, does this develop into a problem? Maybe. Maybe not. Like, I'm not one to sit here and say, like, it's going to be this or that. But since, early September, I started saying, hey, something kind of smells here. The smell's grown, and now we're going to find out in probably the next 6 to 9 months, is there anything worse coming or not? There may be, there may not. We don't know right now. And that's about as much as anyone, I think, can conclusively say. Because the people who do know, the people that actually own this stuff, they're not talking. They're trying to either get it off their books if it's not worth the paper it's printed on, or buy more of it if they think it's at a discount based on what they're seeing.
Right.
But those people are not talking.